Hey everyone, and welcome to this week's On the Spot. I'm Zach Strickland, and with me as always, John Paul Hampstead.
Hey Zach.
Welcome. So we've had continuing the story of the coronavirus and a volatile setting that we've seen. We've had a pretty interesting week so far. People are still buying a lot of toilet paper and Purell.
Food and out west, people are buying bottled water.
And you know, here in Chattanooga, we finally hit that point where the government has said, you know, hey guys, we're going to start shutting some things down. Schools in Hamilton County came down. That's happening throughout the United States. You know, my friend in Maryland said that they've shut down schools there as well. So for the little bit, we're going to enter a new world order, if you will, as we start to really kind of figure out what this coronavirus situation is going to look like in the United States. And, you know, what's fascinating to me is seeing, you know, its interaction with freight. Obviously.
Of course.
Obviously.
I mean, I've related everything back to freight.
Everything has to be related to freight. But we've seen, you know, some interesting patterns over the recent week.
You know, the sort of unprecedented, rapid growth in contracted truckload volumes is continuing at pace. Slightly down year over year, just because this is kind of a normal, you know, seasonal like down year over year from where it was before. It's still like double digits up year over year. Yeah. It's not like, I think it went from like 15 to 14 or something like that.
Right.
But you know, it's a lot of panic buying. It's a lot of seasonal stuff. It's, you know, we can get into that, but there's growth in many markets. All of the major markets are turning back on. What really is, and I think national outbound tender rejections are at what now? 9?
They're back. They're right up around 9%. Yeah. No, actually, they're over 10% today.
They're over 10%.
Over 10% today. We jumped another 200 basis points yesterday. So we're finally seeing the volume, the demand side, have a legitimate impact to capacity. Right. You know, you can't just turn on the faucet all at once all over the country and expect it to just remain stable. So it's important to note that it's still not as volatile as it would be around a Christmas or a Thanksgiving. Yeah. You know, because you have a lot of supply side situations there. So drivers are getting back to their homes. They're taking vacations. July, for instance, the second most vacation time of year. The week between Christmas and New Year's, the first most vacation period of the year. You know, and we don't have that in March. March is not a heavy vacation time of the year, so you're not going to have as much. I mean, traditionally in freight companies, they're ramping up. They're pulling out of that winter doldrum period. They're cycling up. They know that the freight's going to start moving, so they're a little bit more ready. But it's still interesting to see.
It's really the shippers that are, you know, sort of going all hands on deck to make sure that shelves stay full. That's where we're seeing the bottleneck, not necessarily the transportation providers, but shipper facilities and getting product out. We're seeing really great growth in the major northeastern markets like Harrisburg, Allentown, places, even places like, I mean, I think we should talk about LA for a second, because we've started to see recovery in customs shipments, import shipments into LA. Outbound intermodal container volumes from LA are also bouncing off the bottom. Now they're still very low compared to sort of where they should be, but they are now moving up directionally. So that's going to be a positive for drayage companies. It's going to be a positive for large, you know, companies with intermodal exposure like JP Hunt. Yep. So that's a good thing, and we're keeping our eye on that. Other ports, you know, like the Port of New York and New Jersey, if you look at like Elizabeth, like customs shipments into Elizabeth, you know, a little bit of softness there. But overall, we think the China story is starting to take a back seat to the consumer behavior in the U.S.
Yeah, I think that's important to see. Now, of course, the rail volumes and the custom shipments we feel lead the domestic freight market. A lot of what we've seen, you know, moving in the freight industry just now is a lot of inventory. We've had a ton of inventory pulled into the United States. Warehouses were at 89% capacity last year, according to some of our reports, which means that they were 89% full. Yep. So that means
which is above where they should be.
Way above where they should be traditionally. Inventory levels on the TBIS about 1.5 months of sales revenue. So it's we had a lot of freight available to move in the United States prior to all of this. So the customs and the rail, especially the international, the 20 and 40 foot containers, tend to be more indicative of what's coming into the country. The imports, of course, the freight potential. We were like a loaded weapon, ready to shoot a bunch of freight across the country, and that's what we're seeing right now. The big question is, now that we're seeing the customs and imports, start to recover, again, good sign in general, just for everyone.
The question is whether demand for that product can sustain those volumes.
Yeah, and we don't know how long, until those import volumes start to slide up significantly. How fast does the toilet paper come off the shelf? Again, we're not pulling toilet paper from China, but some of those upstream things, like the containers that the Purell is made in.
And it's just like, depending on the mood of the consumer, depending on what the federal government does in terms of fiscal stimulus, depending on how bad the outbreak actually gets, there's no real precedent for what American consumer behavior is going to look like if large numbers of people are sitting at home. Like, for example, does this have a profound impact on e-commerce's market share of retail sales in the U.S. going forward? I could see that changing. Like a bull case would be people are literally going to shop all day online,
right?
Because they're bored. A bear case would be everyone stops spending money. It's very hard. A sort of base case would be like, okay, you're going to see things like restaurants crash, but all that spending is going to go toward grocery stores,
right?
Things like that. So, we're kind of in an unprecedented situation. I think it'd be foolish for us to make like sort of definite, specific predictions about what consumer spending is going to do, but it's obviously we're going to monitor very closely.
Yeah, no, and we're talking largely about the good side of things.
Yes.
Products, physical goods. I think the service side is what most people are concerned about, as if people are shutting down.
Yeah, and I've read things that this might be the United States' first service-led recession. So when you think about, like deals being done, you think about people paying for legal services, buying land, all of the sort of professional classes that you pay fees to do things for.
Right.
That might see a pretty dramatic slowdown.
Yeah, and it's interesting to watch this interlacing dynamic. We've seen an industrial side slow down over the last year. The goods production levels are all down. The service side was really pulling the economy up. And then, of course, the retail spending, the consumer sentiment actually comes out today. We're going to wait on that.
That's going to be interesting.
Yeah, just to see how good they feel.
Is that the February number?
It will be for February, yes.
Okay, so kind of before
the coronavirus really
took hold.
Kind of took hold. So, but it's still going to be interesting to see. We're Anthony Smith, our lead economist, of course, has been watching closely the employment levels. Just to see if there's any fluctuation there, and there has been no fluctuation in employment levels thus far.
Interestingly, and I'm going to talk about this survey kind of preliminarily. We haven't ran all the numbers, but yesterday we sent out an internet survey to thousands and thousands of transportation companies. Within hours, we'd already got 700 responses.
Wow.
40% brokers, tons of carriers, and then maybe like 10% tech companies, 10% shippers. Really, and we asked them basically like a series of questions about how are you responding to the coronavirus, how are you changing your company's operations. Right. Super interesting. Almost none of them said that they expected it to impact headcount. And it was the tech companies were taking the most drastic steps about canceling in-person meetings, canceling travel, having people work from home, et cetera, et cetera. But again, they have the most flexibility.
I was going to say because they can.
Yeah, they can. Carriers have the least flexibility, so they're pretty much. We can see from the way the economy's going that they are staying on the road. They're making sure people can buy what they need to buy to get ready for this. So shout out to America's drivers.
For sure.
Because they're doing a really brave job right now, driving, crisscrossing the country, going in all these places, delivering stuff. The brokers have been interesting. A lot of them are thinking about working from home, putting in contingency plans in case they have to close their. Because you think about a typical brokerage with a big, wide open floor, hundreds of people in a room.
It's very open, kind of like what we have here. So if the virus were to get into a floor like that, that shuts down the entire operation.
Yeah. So talking to Andrew Silver last night, the CEO of Molo Solutions in Chicago, they had their guys unload a trailer full of 300 flat screen monitors. Everyone in the company is setting up a workstation at home. They're testing this week to make sure that everything runs smoothly in case they do have to go to that in the next few weeks. So they're preparing sort of very aggressively, and different companies are kind of doing things at different levels.
Yeah, I think it is going to be fascinating to see just what this work from home state of the being is going to do to the United States economy. This will be the first test of how productive we are as a country. How resilient are we? Also, I think it'll be fascinating
to see. The universities are going to put a big strain on all that sort of streaming software.
Things that we don't necessarily think about every day are going to get hit by this. It's not going to be your traditional retail, like you said, people will sit at their homes and order stuff off Amazon. I think that may get a boost out of this situation.
I honestly do.
Yeah, I think.
If I know my mother-in-law, she's going to be buying stuff.
Yeah, I think we definitely will be seeing a little bit more boost in the e-commerce realm. Again, that's good for freight movements in general. But like we talked about, the service side is the thing that's. I think you're going to see this wave impact.
Like, do I really want to go, get a massage, or go to a restaurant?
And that has a downstream impact on freight. So here in a few months, say they had a weak, second quarter in some of these service side things. The airline industry, of course, is taking a big hit. Travel in general, tourism, money's not flowing as much. So eventually, that'll show up in jobs and people's revenue streams.
Speaking of air, just really quickly, just as it pertains to freight, one of the things that we saw, we actually predicted, but it's showing up, is that air rates from Asia to the U.S. are spiking like crazy, mostly because all the flights have been limited. So on the Trans-Pacific lane, about 50% of the the air cargo capacity is in belly cargo of passenger planes. Only about half is on dedicated freighter aircraft. And so now that China's factories are turning back on, but people aren't flying back and forth across the Pacific Ocean, there's basically capacity's at a premium, and air rates are shooting up.
Wow.
It's pretty interesting. So it was so weird. It's like air rates are going up, but ocean volumes are down, but truckload volumes are up. But it's just like this chaotic thing that's super hard to game out ahead of time, which I think just speaks to how important sort of real-time freight data can be in these situations.
I don't think any of us here really expected the volumes to spike like they did. I myself am actually fascinated to see. It wasn't just like one area of the country that started it. It literally was like freight volumes turned up everywhere all at once, simultaneously. And that's fascinating to me to see. And nobody was going to be able to predict that.
No.
We could predict some seasonality. Volumes tend to increase in March in general, but to see them rise to the level that they have, and tender rejection rates. I mean, it is a devil's tower.
Maybe for the next, in 100 years, the next pandemic, they'll watch our videos on YouTube and they'll be like, oh, we predict truckload volumes to go up.
Yeah, no, the variables are too plentiful for any model on the planet to predict something like this, or to be able to manage it. So really, the key here is just, you have to be vigilant. You have to be every day trying to evaluate your process, trying to figure out what's going on as fast and as quickly as possible to make sure you're making the right moves. And that's, you just have to watch your data. There's no model that's going to be able to predict.
You have to watch your data. You have to talk to your customers.
Yep. Because that's really what's going to drive everything. So, we've got some recovery coming up. The custom stuff is showing some recovery side, especially on the, as we're depleting our inventory levels. So that'll show up. That's a good sign, especially here in America. That means that China has probably recovered to an extent. We can expect, our situation to probably be similar in terms of recovery. I saw
that Bloomberg was saying that China was operating at 80 to 85% capacity right now, which is remarkable.
I know everybody's a little panicked right now, but things look like they might be, at least at a turning point as we enter some warmer time of the year as well.
Yep.
So, Thanks for watching this week's On the Spot, and stay tuned for more information about all that's going on in the freight market.